The government panel completes formulating a new bankruptcy code to make business exits simpler, proposes to deal with insolvency applications in 180 days and create a bunch of professionals to streamline the process. The finance minister says the bankruptcy bill will be moved in the winter session of Parliament.
Nasdaq-listed IT major Cognizant delivers yet again dollar revenue growth of 3.3%, beats expectations, raises its growth guidance to a whopping 21%.
A new bombshell hits Volkswagen. Over 8 lakh vehicles may have emitted carbon dioxide along with nitrous oxide. Some petrol models could also now be involved. The company confirms it has received a notice from Indian authorities.
Nestle's Maggi noodles all set to make a comeback as early as this month. The company says samples of newly manufactured stocks have been given a clean chit.
I am very happy that this project has survived 2 governments.
The man behind the Aadhaar card says the unique ID is here to stay. Nandan Nilikani slams the misinformation campaign against Aadhaar, also says he has hit the end of the road as a politician.
The man who delivered the IPL verdict, Justice T.S. Thakur, will take over as India's next Chief Justice from H.L. Dattu on the 2nd of December.
Russian President Vladimir Putin continues to hold on to the top spot on the Forbes most powerful list for the 3rd straight year. Prime Minister Modi makes his entry into the top 10, but his good friend Obama is pipped out from the 2nd spot by German Chancellor Angela Merkel.
देश ये कभी देश इंटॉलरेंट रहा नहीं है।
कांग्रेस पार्टी ऐसी शक्तियों से पूरी ताकत के साथ मुकाबला करेगी।
These are guys who took their awards even after Sikh riots, never returned them for 20 years as though which Bhagalpur happening is. None of these occasions were there. I completely disagree. They are most intolerant of Modi, and I think this is unfair.
The mood of the nation is for development. People want development and uninterrupted development.
Do you think the intolerance debate has ruffled feathers with the opposition?
Yeah.
Well, the government today went all guns blazing, attacking the Congress party and others over the debate on tolerance. In fact, the Prime Minister's office today tore into a section of the media for what he called irresponsible and distorted reporting over a report put out by Moody's Analytics. The centre said the personal opinion of a junior analyst was passed off as commentary on India by the ratings agency, so the debate continues to rage. Good evening. Thanks very much for joining us on India Business Hour. Hi, Nantara.
Hi, Shireen. You know, today, in fact, I was there at that India Economic Summit of the World Economic Forum, from Venkaiah Naidu to Devendra Fadnavis. They all said there is no question of India being intolerant. It is just a section of the media, and said maybe the Congress should show some tolerance and allow Parliament to function.
Well, the Congress can hit back and say, you know, maybe you should have shown some tolerance and allowed Parliament to function when you stalled it for 2 years. But this is going to continue. The back and forth is not ending anytime soon. So let's get straight to the action on the Lal Street. Ignoring strong global cues, the stocks tumbled in late trade. The Nifty today losing about 20 points. It's broken below 8,050. The Sensex lost nearly 40 points as the banking stocks led the decline. So the Indian markets closed in the red. Of course, the rest of Asia today was up and about. But the top story tonight, India is a step closer to making business exits simpler. The TK Vishwanathan panel has submitted its draft bankruptcy code to the finance minister. It's been put up now for public comment. Here are the top 10 things you need to know about the proposed code. First up, the setting up of an insolvency regulator with professionals who will assist companies to go through the process. Individuals and unlimited liability partnerships have also now been included. However, bankruptcy of individuals will only be taken up if the resolution process fails. So who will handle what? The Debt Recovery Tribunal will handle cases of individuals and partnerships with limited liability, and the Company Law Tribunal will look after companies. The code also seeks to set up an information database of individuals and companies who file for insolvency. The entire process should be completed within 180 to 270 days, and fast-track insolvency will be undertaken between 90 to 135 days. The code also proposes to set up a committee of creditors, and all decisions will require 75% majority vote. The code prescribes procedures for liquidation and the order of priority on who gets paid first when a company or an individual files for insolvency. It's a large report. These are just some of the highlights, but here's the man behind the bankruptcy code, T.K. Vishwanathan, in an exclusive conversation with CNBC TV 18 Sapna Das. Also, here's the Finance Minister promising to move the bill as early as the winter session of Parliament.
The most important thing we are trying to address is the early detection of sickness of enterprises, whether corporate or individuals. And the earliest occasion when somebody is not able to pay his debt, he is not able to manage his financial thing, then it triggers action. So we try to discover it the early and try to address it. So within 180 days, the resolution plan will be worked out, and if you can't resolve it, then it goes for liquidation. There's no point in keeping it alive. We had very unpleasant experience with the Sika Bifer. So to address these things, we tried early detection of sickness and how to solve that. That's a theme behind the whole exercise, and we have done that. And we have done it across both for corporate insolvency as well as for individual insolvency.
So the point over here also is that the timelines that you have mentioned, in terms of actual handling of the applications. But if you look at the entire format, this will require a repealing of some of the existing laws, and this will also require a reworking probably even of the Companies Act, because for example the NCLT proposal, that has yet to take off under the Companies Act, that has yet to be notified. So how do you see this thing panning out?
We have examined the whole thing, and we have made some exhaustive amendments to the Companies Act, and that is indicated in the schedule to the present code.
Such
if you
as?
see the code, the schedule makes numerous amendments to the existing Companies Act apart from other laws as well. So we have addressed each one of those instances and how to handle that. And the timelines will not be a great problem, because now hitherto everything will be decided by the insolvency resolution professional and the creditors committee.
Right.
So I don't think there is scope for any delay in solving this problem. So either way you take a decision, you wind up and you get the best value of the assets of the debtor, which is not possible at the current legal framework.
Right. So coming back to the issue of timelines, you said that most of them are tenable and it should not be a major issue. But in terms of the legislative changes, for example, even changes in the Companies Act, the current changes the government had done, that has taken almost 10 years. So how do you see the legislative process moving forward for us to create this new bill, this new law?
I think that the National Company Law Tribunal is already in position.
It has not been notified, sir. We don't know the rules.
No, but the recruitment is going on. It's hopefully very shortly. It is all passed through all the legal challenges, so it will be available readily in another 1 or 2 months. So it starts functioning. So all that requires is a notification of the government, which they will do.
The committee which was drafting the bankruptcy law, I'm told, has already finalized its recommendations and is likely to submit a report to me in a couple of days. I'm immediately going to translate that recommendation into legislation so that the exit law is also put in place as soon as possible. My endeavor will be to try and introduce it in the next session of Parliament itself.
So the bankruptcy bill is going to be tabled in the winter session of Parliament, and you heard the man from himself who had suggested all of those recommendations, also adding that all the amendments that will have to be made to existing laws, including the Companies Act, all of that has been presented to the government. Here's a big international story. German car maker Volkswagen continues to free fall into a bottomless pit. The stock tanked after the company said while investigating diesel emissions, it found irregularities in carbon dioxide emission levels, which could affect around 8 lakh cars in Europe. Farah Bukwala-Vora now joining us with the latest. Farah, it's clearly getting tougher for Volkswagen, and it's going to have to set aside more money to deal with this latest crisis.
Well, that's right. You know, the pile of dirty laundry is only adding up. So let me give you a sense of the latest that is happening globally. Now, Volkswagen has admitted that while investigating the diesel emission scandal, it has discovered what it calls irregularities in carbon dioxide emission levels, which has affected 8 lakh cars in Europe. Now, remember that all this while investigating the diesel emission scandal, we have been talking about the falsification of emission data of smog causing nitrogen oxide. And now, for the first time, Volkswagen is admitting that carbon dioxide emission data has also been falsified. So what are these irregularities? Basically, Volkswagen had set carbon dioxide emissions and fuel consumption figures too low when certifying some models. Now, carbon dioxide forms a key measure of fuel efficiency, and it is the basis for taxation and emission regulations in Europe. Now, this latest issue affects not just Volkswagen, but also its sister brands Audi, Skoda and Seat. This issue mainly affects diesel cars, but now could also include petrol models, and it would cost Volkswagen an additional 2 billion euros or $2.2 billion. Remember that Volkswagen has already set aside $7.4 billion to recover recall costs. So you can see basically how this scandal is assuming greater proportions, and the economic risk to the company is only growing larger.
Okay, so that's the global story, Farah. But let's talk about back home, the problem that Volkswagen is facing. The government issuing a show cause notice. What is the latest?
Well, now, that's right. Back home in India, the Heavy Industries Ministry issued a show cause notice to the company today because the Automotive Research Association of India, or the ARAI, which is the agency that has been mandated to investigate into the scandal, has found that emission levels of 3 on-road models, that is the Volkswagen Jetta, Audi A4 and the Volkswagen Vento, significantly vary from the data that has been provided by the company during lab tests. Now, Volkswagen confirmed that it had received the notice in a press statement and said that it would respond to the same by 30th November. It also reiterated that it had asked the government for time till the 30th of November to present the findings of its internal probe. Remember that CNBC TV 18 on the 29th of October had reported on an imminent action by Volkswagen, and that is the recall of more than 1 lakh diesel cars in the coming days.
All right, Farah, thanks very much. With the big corporate story, it's becoming a habit for Cognizant, a good habit, I should say. The company has managed to beat street expectations once again. Revenues grew by more than 3%, well above what the street was expecting. Profits and margins fell marginally. But here's the kicker. The company has hiked its full-year growth guidance for the 3rd straight quarter. At the start of the year, the company said it will grow by 19%, but now it believes growth will be 21%. A quick check on the Cognizant stock as we speak. And joining us now to talk about these numbers in the road ahead is Francisco D'Souza, Chief Executive Officer at Cognizant. Frank, appreciate you joining us here on CNBC TV 18. Let me start by asking you, while other peers of yours are struggling to meet the guidance that they've held out or meet street expectations, for the 3rd time this year, you've hiked your full-year guidance as well as your EPS guidance. Are you conservative when you actually put out your guidance, and what's the possibility of beating 21% as well?
Great to be here, Shireen. Thanks for having me. We had a very strong 3rd quarter, and as you said, on the back of the 3rd quarter results, we've taken our guidance up for the 3rd time this year. Our Q3 revenue grew 3.3% sequentially, or 23.5% year over year, and we beat guidance for the 3rd quarter by about $45 million. So overall, a very strong quarter, broad-based across the business, and we are happy with our performance. I think what's really going on out there is that you have a situation where we are in a once-in-a-decade shift in the technology landscape, and there's a tremendous amount of opportunity for us at Cognizant to help our clients manage and make that transition. We're winning in the digital space because of the investments that we've made, the fact that we're innovating at scale, and this really broad set of integrated capabilities that we've built in the company to help our clients make the transition from the last wave of technology to a new wave of digital transformation. So we feel great about the business and the performance that we've had year to date.
So do you think you could better 21%, Frank, given the visibility that you currently have and your ability to beat your own guidance 3 times around this year?
We set our guidance based on what our realistic outlook is for the period that we're giving guidance. We feel good about the current guidance that we've provided, but the demand environment is certainly strong. We feel very good about how we're positioned. and we think we're going to continue to to perform well, both for the rest of this calendar year and then as we go into next year.
I want to talk to you about digital, and you were talking about the opportunity that you see on the digital side and the investments that you've made in order for you to be able to win on that side of the business. Can you take us through further investments that would be required on the digital side, and also how you intend to continue to capitalize on us, if you can throw a little more color on the digital side of the business?
Thank you. Yeah, absolutely. You know, I would say that success and winning in digital today requires a broad set of integrated capabilities to address the market demand. There are 4 key investment areas that I'd point out. First is the actual digital capabilities themselves, which we're building out, whether it's technology or strategy, design, data science. We're spending a lot of time building those core capabilities out. The second is that, as you know, over many years we've been investing in our consulting business, and consulting plays an absolutely integral part in helping clients navigate these big shifts that take place in the technology landscape. So the second area of investment is in our consulting business. The third area that we're investing very heavily in is in all of the capabilities to help optimize and integrate digital businesses with our clients' current legacy systems. You know, the legacy environments form the backbone on top of which digital businesses get built, and so that's the third area of investment. And then the fourth area of investment that we continue to build out is what we call platform-based solutions, where we can create shared utilities across an industry or even across multiple industries so that investments get shared across multiple clients.
Are you actively looking at M&A to be able to continue to strengthen and beef up your capabilities on the digital side? You've ended the quarter with about $4 billion of cash. I understand that the TriZetto integration is going at a pace which is comfortable for the company. Are you actively looking at M&A specifically in the digital space?
Yeah, you know, we're very happy with the progress of the TriZetto integration, and in fact with our M&A program overall, and as a result of that we will continue to look at M&A as we always have on an active basis. Our focus has always been and will continue to be primarily on small tuck-in acquisitions that will help us either add a specific capability to the business, grow our geographic footprint, or increase the depth in particular industries that we serve. And that pipeline of M&A opportunities continues to be rich and robust, and we'll continue to look at that as we go forward.
Okay. What can we expect as far as margins are concerned? And also I'm looking at what's happened on your utilization rates. Utilization is up on a sequential basis as well. Pricing, I understand, has been stable for the quarter. Given the current sort of environment, what more can we expect in terms of being able to squeeze out further on margins?
You know, our approach to margins has always been to keep our operating margins on a non-GAAP basis in the 19 to 20% range and reinvest everything above that back into the business. And I think you're going to see us continue that strategy going forward. You'll see that margins will remain in the 19 to 20% range as we go forward. But then we will take, you know, this is a time when it's important for us to continue to invest organically in the business because of all of the opportunities that are available out there. So above 19 to 20%, you will see us continue to invest that back into the business. We're happy with the core operating metrics in the business. Utilization did go up. We think that there may be a little bit more room for it to go up, but then it should stabilize at that level. Taking utilization up was a very conscious effort that we've undertaken over the last couple of quarters, and we're happy with the progress that we've made on that front.
You know, what about attrition? Because your annualized attrition this year is at 20%, which is higher than normal. Can we expect some sort of employee retention benefits, schemes, etc., being given out in order for you to be able to bring down attrition rates?
You know, the high attrition rate is an industry-wide phenomenon. It's not a phenomenon that's specific to Cognizant. Nevertheless, something that is of concern to us. But one of the things that we believe, as you said, is that, you know, as the company performs well and as we outperform our own expectations as we did this quarter, that we should and will share that with our employees. And so we've talked about today that as part of our results this quarter, that we've taken our provision for annual bonuses up considerably, and that we expect to pay our employees very healthy bonuses this year as we go into that cycle at the end of the year and at the beginning of next year.
You've said healthy and you've said considerable bonuses. Could you quantify that for us?
Well, you know, we expect to pay our employees well above 100% and well above the levels that we paid to employees last year.
Okay, just a quick word, Frank, as far as the various segments that you operate across healthcare, life sciences, retail, infrastructure services, what's looking most exciting at this point in time from a deal win as well as a client win point of view?
You know, I would start by saying that virtually no industry is untouched by this wave of digital technology transformation that we're seeing. So from that standpoint, I think there are exciting opportunities across the industries that we serve. I think that I would point to healthcare in particular as an industry that I feel particularly excited about because of the tremendous opportunities for us to use technology to not just improve the efficiency in that industry, but to impact lives and to save lives. And so I think as I look to the long run across the industries we serve, I think there are tremendous opportunities in healthcare of which I'm particularly excited.
Okay. Frank, what would be the red flags that you would be watching out for? And also as far as the geographic performance is concerned, any areas of particular concern? And where are you really seeing demand at this point in time when we talk about geographies?
Yeah. You know, I would say that across the geographies that we serve, demand is strong, although the complexion of demand changes, as you can imagine, around the world. In some parts of the world that are perhaps a little slower growth than others, we see demand for more traditional services that are focused on cost optimization and efficiency, whereas in parts of the world that are more stable or growing modestly, we see demand for innovation and growth types of initiatives. So the complexion of demand changes a little bit as we look around the world. And as I said, to your point about red flags, the only thing I would say is that you know, we saw this quarter some pause in our communications sector as a result of some M&A that took place in that sector. And so as I look to next year, that's the only place where I would say, you know, with the wave of healthcare mergers taking place in the industry, we have to see how that will play out across our business. But I think we're very well positioned for the long run in healthcare, and we're also very well positioned to help clients with the integration work should those mergers and acquisitions actually come to pass.
Well, Frank, another good quarter there from Cognizant. Appreciate you joining us here on CNBC TV 18. Thanks very much for speaking to us and taking us through your quarterly performance and the road ahead. That's Cognizant beating street estimates as well as upping its own guidance. But moving on now, the country's most popular 2-minute noodles may be back on the shelves within the month. Nestle India said that it has all the necessary clearances from the 3 accredited labs who were testing the newly manufactured Maggi samples. Priya, who's been tracking the story since the ban was imposed on Maggi in June this year, joins us now with the details. So Priya, it looks like it's an all clear for Maggi and we could start to see Maggi noodles back on the shelves.
Well, there certainly is some relief for Nestle and some cheer for consumers. Nestle India is all set to commence the sale of Maggi noodles in November. In fact, the company has been battling legal as well as regulatory tangles over the last 5 months. What the company has said is that it's got a clean sheet from the 3 accredited labs that the Bombay High Court had suggested the newly manufactured lots to be tested from. Also, to begin with, Nestle will manufacture Maggi noodles from its Karnataka, Punjab as well as its Goa facilities, and is also in talks with state authorities in Uttarakhand as well as in Himachal Pradesh to begin a production from its Tehliwal as well as Pantnagar facilities. Now, what we learn is that the company will be launching Maggi noodles in a phased manner, and to begin with, it will begin the sale of the masala variant of Maggi noodles. In fact, I remember over the last 2 quarters, Nestle's fortunes have dipped. In fact, it had reported a 60% dip in its net profit in the Q3 of this calendar year. Also, it had posted a 32% decline in revenues for the 3rd quarter. So clearly, Nestle India is in fact looking forward to a much better second half of the year and 2016. Back to you.
Thanks a lot, Priya, for joining us with that. So maybe by the time of Diwali, or at least by this month, we're going to see Maggi noodles back on the shelves. Meanwhile, the Food Processing Industries Minister Harsimrat Kaur Badal, while emphasizing on the quality of packaged food products, added the industry should not be harassed in the name of quality.
While people should be assured of the packaged food that they are eating, that it is healthy and good for them, and there is nothing which is going to harm them, at the same time, the industry must not be harassed, because processing needs to be encouraged. As like we have just discussed in this debate, it addresses a host of problems and especially addresses the farmer issues. So while the industry is given a free hand to blossom and to grow, there must be regular checks in transparent systems in place.
Well, that's the Food Processing Minister there on the Maggi debacle. The Aadhaar card is here to stay. That's the word from the man behind the mega project, Nandan Nilekani. I spoke with him a short while ago about his book, Rebooting India and the Fate of Aadhaar, which continues to be stuck in a legal tangle. Nilekani is optimistic that the unique ID, which has already survived 2 governments, will survive the misinformation campaign that continues to be spread against it. Nilekani also saying that he has finished his stint with politics and he is not going to consider a political career any longer. And of course, his idea for rebooting India is for the Prime Minister to select 10 grand challenges and for the government to identify 10 individuals who will then set up their teams and take each of those challenges forward. So create a startup around each of those challenges. That's the A team, and that's the capital idea in Rebooting India, Nandan Nilekani's latest book.
Well, I think we were very pleased that Aadhaar, which was an idea started and encouraged by the previous UPA government and by the leadership of the UPA government, which gave me full support for Aadhaar. The fact that it has continued and is been equally enthusiastically supported by this government is a very good thing. And I think Prime Minister Modi is technologically savvy, so he's understood the power of Aadhaar and the platform. And so I am very happy that this project has survived 2 governments and is well on its way to deep usage.
Well, speaking of deep usage, Nandan, and I ask you this in the context of what's happening as far as the Supreme Court is concerned. You write about the challenges that you faced while trying to roll out Aadhaar. Of course, one was the problems with the NPR, but the constitutional validity aspect of it continues to be a problem. A 5-judge bench now of the Supreme Court has allowed the government to link the Aadhaar card to some government schemes. It still is not mandatory, and there are many caveats which the government will need to adhere to. Do you think that the concerns related to privacy, the lack of checks and balances, the lack of safeguards that have been taken up by various PILs are overstated and exaggerated?
There's no question that many of these things are misinformation campaigns. Aadhaar is a very secure system. The data is encrypted and stored securely. It's only an identity system. It does not accumulate data about anyone and so on. And I think the Supreme Court has actually, what the issue that has gone to the constitutional bench is whether privacy is a fundamental right. It's really a much larger question than just about Aadhaar. Privacy as a fundamental right has much bigger implications about data with companies, online companies, data with government and so forth. So it's a much larger question that the court is, taken up. And in the meanwhile, I think Aadhaar enrollment continues, 935 million people, reaching 1 billion or 100 crore people in the next few months. Aadhaar has been a great success in the LPG program, which is the world's largest cash transfer program that has saved the government 12,000 crores. And the Supreme Court decision actually gives the use of Aadhaar across many, many applications. PDS for food and kerosene, LPG, for EPFO, that is pensions, Provident Fund, pensions, Narega, and Jan Dhan Yojana. And if you add up the people involved or beneficiaries of each of these programs, it will add up to 300 to 400 million families. So effectively, everybody can be using Aadhaar in some capacity or the other. And the private use of Aadhaar continues. I can use my Aadhaar wherever I want in a private transaction. So I think we have a lot to do which we can do with the existing.
No, you're absolutely
so I think
right.
it's here to
the
stay.
Supreme Court is now It's here to stay, but the constitutional validity of it is still under question, and that is something that the previous government and this government have not moved on.
No, I think the issue that has been put to the constitutional bench is whether privacy is a fundamental right. That's like a higher level question. It's not about the, I think Aadhaar is very much here to stay. Now, of course, there is a Aadhaar bill which had been, which we had put in the Rajya Sabha, a few years back. It's still there. And if that bill is taken up and passed, I think that obviously will even further strengthen the case.
That's exactly the question that I was asking you. The Aadhaar bill wasn't taken forward by the previous government, and even this government has sort of pussyfooted around it at this point in time. They've got the regulators to move the Supreme Court, but they haven't moved as far as the Aadhaar bill itself is concerned. Do you find that odd, given the fact that it is so crucial to the government's subsidy rationalization program?
So this is a question that you have to ask the government, Shireen. I'm here in Bangalore. I'm doing my own thing. I have no, idea what's happening. But I'm sure they're thinking about what to do about the bill. But in the meantime, I think Aadhaar is here to stay. And as you yourself know, more and more applications are using Aadhaar, and the full value is being realized.
Well, that's Nandan Nilekani, and you can catch that entire conversation on CNBC TV 18 on our YouTube channel and our Facebook page. But coming up next, as the Bihar poll heads for climax, what does industry in the state want from the new government? A special report up next.
And is the new Honda BRV worth your money? Buckle up for a test drive after this break.